The United States trade policy under President Donald Trump remains as aggressive as ever, with tariffs at the center of his strategy. Trump has imposed sweeping duties on allies and rivals alike, citing national security and economic leverage. Canada, one of America's closest partners, responded with retaliatory tariffs to shield its industries. But Prime Minister Mark Carney has now shifted course, announcing a reset. Beginning September 1st, Canada will lift many retaliatory tariffs on U.S. goods covered under the USMCA, also known as CUSMA. While some see this as a concession, Ottawa frames it as a calculated move, easing costs for Canadian families while preserving leverage in critical sectors. Tariffs on steel, aluminum, and automobiles remain firmly in place. For months, Canadian exports to the US have fallen sharply, with businesses delaying investments amid uncertainty. Yet today, more than 85% of Canada-US trade already flows tariff-free. The average US tariff rate on Canadian goods now stands at just 5.6%, the lowest of any US trading partner, compared to a global average of 16%. By lifting many countermeasures while holding firm in strategic sectors, Canada signals both flexibility and strength. Carney's strategy extends beyond Washington. Canada is simultaneously deepening ties with Europe, seeking to diversify its markets after China effectively shut down imports of Canadian canola with duties as high as 100%. This shock underscored the need for alternative buyers. New agreements in Poland and upcoming talks in Germany aim to secure European partnerships in energy and agriculture, giving Canada a safety net against US or Chinese trade pressures. At home, the impact is immediate. The removal of retaliatory tariffs will lower costs on food, beverages, and household goods. Analysts estimate that in just 2 months earlier this year, Ottawa collected $2.5 billion in duties, costs largely passed on to consumers. That burden will now ease. Critics argue Canada is conceding too much, but supporters call it a tactical reset, narrowing the fight to sectors that matter most while protecting households and small businesses. Beyond trade flows, Canada's leverage remains significant. It is the largest customer for US goods in several industries. Canadian pension funds hold over $1 trillion in American assets, with potential to expand further. And in energy, the US relies on Canadian oil for nearly 4 million barrels per day, as well as uranium for a quarter of its supply. Ottawa's reset does not discard leverage, it consolidates it around essentials Washington cannot ignore. Meanwhile, Trump's ambitions are reaching northward. His administration has revived a fixation on Greenland, not only as territory but as a treasure trove of rare earth minerals. These resources are crucial for defense technologies and clean energy, areas still dominated by Chinese supply chains. Greenland has already granted a 30-year mining permit to an EU-backed project, and US investors are racing to secure stakes despite logistical and environmental challenges. The contest mirrors Canada's experience. Trump has raised tariffs on Canadian non-USMCA goods to 35%, targeting lumber and machinery. Carney, coordinating with provincial leaders, is resisting pressure while expanding ties with Mexico and Europe. Canada is also investing in Arctic and mineral supply chains that overlap with European and Greenlandic projects, ensuring it won't be boxed in by US policy. The volatility of Trump's tariff playbook was underscored earlier this month when Washington imposed a 39% duty on imported Swiss gold bars, disrupting global markets overnight. The move shocked traders who assumed bullion was untouchable. For Canada, it was a warning: no sector is safe. Even strategic minerals, energy, or advanced manufacturing could be targeted. This unpredictability is why Carney's strategy matters. Ottawa is combining public pushback with quiet diplomacy, lowering consumer costs at home while keeping pressure focused on industries that matter most. Canada is not retreating, it is adapting. By diversifying markets, leveraging critical exports, and resisting one-sided deals, Canada is proving that smart strategy can withstand even the most unpredictable trade partner. This is True Estate Report. Thanks for watching, we'll see you in the next video.